We also have other types of risk. For example, strategy risk. So the company takes on a strategy to grow in a new market with a new product. But the company failed to assess the risk in that particular country, right? And also the product itself is not a promising product. It's approaching to the end of the life because of competition. So the result is that the company lost a lot of money in this initiative. So when you look back, that's really a failure of the strategy, right? It's the wrong strategy at the wrong time, at the wrong place. So that's a strategy risk. Liquidity risk. So this means the business does not have enough operational cash to support day-to-day operational activities. So the cash flow is broken. So the business cannot continue. So that's a liquidity risk. Reputation risk, something bad in the press about a particular bank. For example, maybe the bank fails to do the terrorist name check, right? Let the terrorist money going through the bank's system. So that's really bad, right? So all the bank system continuously to break down every other week. So that's not good reputation. Nobody wants to bank with such a bank anymore, right? And also recently there's a climate risk. So for insurance company, if there's a hurricane or wildfire hits particular region, it's widespread. There's a lot of damage to the properties. The insurance company need to pay out a lot of money, right? So that's a climate risk. So there are many other risks. So however, the classifications, they are not clean cut. That means they are intertwined in some cases, right? For example, we talk about the system breakdown. That actually can be classified under operational risk. But the system breaks down, then there's a reputational risk as well. People think, oh, the bank system is not that robust. I'm not sure I want to put my money there, right? So that will lead to some financial loss. So that's also reputational risk. If it's so bad that all the people, they want to get their money out, right? So they want to withdraw all the money from their deposit accounts. So the bank already extended the loan out. It doesn't have enough cash. Then that becomes a liquidity risk. So you see that system risk, reputational risk, liquidity risk. So they are all tied all together, right? So depending on how you look at this. Okay, so that's the different types of risk.